Good morning, everyone. Today is Saturday, finally Saturday, February 17th. And today we'll cover the trades for CONY and TSLY as of Friday, February 16th. So let's get to it. I'm going to start with CONY today because I tend to ramble on maybe too much on TSLY, and I don't give enough love maybe to CONY because by the time I get to it, I'm kind of exhausted mentally. So let's start with CONY. Here are the intraday trades, which you can get directly from their website. If you go to, select any of the covered call ETFs, you select CONY, you scroll to the bottom, you see something called intraday trades. You can click this anytime after 5 p.m., any trading day up until probably 12 a.m., because the next day it's gone. So if you guys ever wanted to pull the data yourself, that's where you would do it. So here's what I pulled yesterday. And again, I pull it manually. I pull it, I take a screen print on my phone. So what did they do? They did three things. They closed out the current synthetic position of 140. They opened a new synthetic position of 190. And then they closed out the weekly call to make a new weekly call. All right. The confusing part is they closed out the synthetic on the top, and when they opened the new one, they used much less, much lower number, 20,725 to 18,410. So that just tells me people have been selling out of CONY. So same thing on the bottom, right? They closed out the weekly call, which had 20,725 contracts, and they opened a new weekly call, 18,410. So, very interesting to say the least. And the biggest item on here on the very top, buy to close the call. Guess what? We sold this call. So they made $50 per share on that synthetic part of it. All right. So we'll show you that in a second. All right. Let's get to the spreadsheet. So here is the synthetic 140. The green is the end. I always leave typically the green is the to be determined amount. So it's like the estimated amount where I fill in what it would cost to close. But when we close out a synthetic, I put it in the green. So on 2/16, we closed out 20,725 contracts, which again, they made a killing. They made $103 million on the buy call that they opened. Obviously they sold the call, and then they had to buy to close the put. They had to pay $3.3 million, which was essentially nothing. But in the end, this short-term synthetic of 140 strike, they made $100 million. $100 million. And they just opened this on February 9th. So they made $100 million in 7 days. Look at the power of options, guys. That is just some... Look at that. Oh my God. Could you imagine? But, actually no. They, what do they have to front, right? When they started the position, they fronted 3.7 million, okay? Because you see at the top, the 2.9 position, but still they made $100 million in 7 days on this synthetic position. Wow. Unbelievable. Okay, let's go to the synthetic 190. So new position, they opened, again, February 16th, 18,410 contracts. Buy call cost, a little less than the sell put, so they actually got a credit. And it looks like, when it closed, obviously if they closed it the same day, they would lose 9.8 million. But again, irrelevant. One thing that sticks out, though, to me, not only obviously the strike price changed to 190, and coin actually, it sold off towards the end of the day. It went down to 180. I guess it was around 190 when they opened this new synthetic. But look at the expiration, guys, 3/15. Like, they clearly, at least for this fund, they clearly utilized the synthetic for monthly income. I mean, that's clear to me. Because if they sold this 6 months out, they wouldn't get as good a payout. Probably not. Again, I don't know. You'd have to look at the numbers, but This is more of a weapon on a monthly basis for CONY because they can get blown out in their weekly calls at any point in time, which they did, and we'll get into that. So synthetics so far for CONY looking really good. All right, so how'd the price do? Well, the price after earnings, which was insanely better than expected, 180.31 it closed at, gains of 8.84%. It was up double, like 15%, I think, at some point, maybe even higher. Then it dropped down towards the end of the day. CONY went up 1.17%. So, but CONY was capped. You guys saw that, yesterday. So they closed. Where are we at? Here's the 20,725. You see, they got 287 right per share. It cost them 24.15 to close it. So that was a loss for that contract of 44.1 million. They lost 44.1 million, right? So in retrospect, was 16% out of the money high enough? Obviously not. But, how far should they go? With earnings, to me, yeah, a little higher. I mean, well, on top of that, they should have scattered, but they didn't. So they lost. They lost a lot of money, okay? Luckily, they make money on the synthetic. So again, that bails them out. If these funds just relied on weekly calls, they would never make anything. I mean, sometimes, like CONY, forget it. TSLY, sometimes they're right, sometimes they're wrong, but they're lucky. I mean, the synthetic, the whole thing, the whole setup is like pretty good, but you get what I mean. Like that was, I don't think anyone predicted the week we had last week though. But so they would have lost their shirts either way, but maybe they could have scatter these a little better. Anyway, what they do with the new contracts? They did a 205 strike, okay? That's a break even of 208.37 for next week. Next week's 4 trading days, by the way. 13.69% out of the money. How do I feel about this? Well, let me get a sip of water. All right, number one. Is it far enough out of the money? Not really. Maybe a little higher it can go if you're going to pick one contract. But number two, why are we doing one contract? Why are we doing one strike again? Why aren't we choosing multiple strikes? I don't understand. Like why are we going back to this? Why are we relying on one strike price? We don't have to. We have 18,410 contracts. You can do this 18,410 different ways, yet we choose to do it one way and one way only. I don't get it, guys. I don't get it. All right, so they got 6.2 million for that, but they're losing money. So they're down 58 million if you look at the top cell L1. Cash and treasuries though, cash went up 51 million to 51 million. It was negative the day before. Treasuries went down slightly. I guess they pulled some from treasuries because they thought they needed it. Or maybe they probably trued up the cash before they made money on the synthetic. But either way, they made it. It was a $15.4 million increase on cash and treasuries. Again, because that synthetic was a domination, right? They made 100 million about, right? And they lost what? 44 million. Okay, so outstanding shares 14,125,000, and they're at a loss. They're down 58.6 million on their weekly calls since the post declaration date from the prior month. Let's go to the actives. So going into next week, Monday's a holiday. Again, 4 trading days. 18,410 contracts, 205 strike, 13.69% out of the money. Again, for one position, it's okay, but for all of them, I don't know. I don't know why put all your eggs in one basket, but it seems lazy. But either way, go either way. Coin has been on such a tear that maybe it will sell off, right? So maybe this was secure. Maybe they could have gone lower. Who the heck knows, guys? Who the heck knows? At least it's not 2%. But their 30-day IV is just insanity, 95%. But again, that counts earnings in there. CONY price is 23.32, which is so dominant. Possible capital gains 319, insanity, and my reaction, it's like kind of like a people's eyebrow. Like, wait, like what? Why aren't we scattering? Why? What? What are we doing? Anyway, trades update. As you know, I took a profit the day before, and my hope of earning bad, not bad earnings, but bad reaction to the earnings did not happen. So I did not get the opportunity to buy back. However, towards the end of the day, I saw it drop. So I had a chance to buy it in the low 23 range, which kind of just would have made this a wash in general. But I'm going to wait. I decided to wait until Tuesday. I'm hoping coin kind of, settles down a little more. People take some profits. And then maybe CONY will get back to the $22 range, so I can get back to my normal cost basis. Even, if it can get lower, even better. But I'll show you in a second why I want to be in CONY before we get closer to X day, man. Which, check this out. Insanity. Look at this synthetic income. 126 million. Short call income, $58 million loss. Net income, 67.9 million. Outstanding shares going down, but it's 14.1 million. Look at this total income per share, 481. 481, right? 481. Insane. Insane. But look at last month, guys. Look at last month. Total income, I show 332. They paid out $1.07. So NAV reserve, they essentially took 440 from the NAV. So they're not going to pay us 481. So let's just get that straight. Let's get that out there right away. But the payment will be good. That's all I can tell you. So we'll see how this goes, though. It's still early. Holdings, let's see where we're at. Again, one call, so I'm just going to highlight the one call. We have 4 days, $1.76. It would cost to close it. What did we make to open it? Oh, wow, $3.37. Yeah, that's because we opened it when it was a higher price. Oh, okay. We opened it at a higher price. So this was probably way more out of the money, actually, to give them a little credit. Because look at the price, $3.37 we got. And it's only $1.76 to close that sucker. Wow. Okay. Yeah, so they may have been like 20% out of the money. I probably should have checked that on the charts, but either way, all good. We'll see how it goes. But yeah, they can close it out now. Close it. Make them profits. Take the profits when you can. All right, that's CONY, guys. And again, pre-market, kind of irrelevant because we got a long weekend. But let me refresh this. After hours, coin went down, this is what I want, because selfishly I want to get back into CONY, so I can be happy again. It's eating it at me that I did that stupid move, but it's fine, whatever. So yeah, let's get to our favorite, everyone's favorite and everyone's enemy, TSLY. All right, so what did they do? Let me get a sip of water. No synthetic action here. Just 3 contracts out, 3 contracts in. So BC means buy to close. They did a buy to close on the 216s. Obviously, they expired. So they paid out, the amounts you see on the right column. And then on the bottom, these are the new position SS short sale with a new expiration of next Friday, new strike price. And you see the strike is all of the same. So just like CONY, they are not scattering. They think it's a good idea to just go all in on one strike price, which again, they are the experts. So let's hope their decision is accurate. And that's, but the execution price, they made a lot of money. But how far out of the money did they go? Well, you'll see in a second. Go to the TSLY file. So what do we got? We got the synthetic 220. Still lingering. Still costs us money to close because Tesla's at 199. We broke 200, guys. So this 220 is in reach. It's a month away. We could make money on this synthetic. It could happen, right? It could happen. But will it? who knows? Apparently 200 is like a freeze point. I don't know what the word is. Resistance, right? And I hope it is the resistance. You'll see in a second. So this is where we stand with the 220 still remains. The 185 still remains too. But they can get 18.3 million if they decide to close it. So that's good. So they got that in their back pocket. So that's positive. Because again, Tesla price 199 is above the strike price of the synthetic. And again, the synthetic is a buy, call, sell, put. So the sell put, it would cost them much less when the actual price of the stock is above the strike. And they can make a lot of money when the actual price of the stock is above the strike. So that's how these synthetics works. As you can see, the call credits a 22.4 million as of today, or as of close Friday, and they put will only cost 4.1 million to close it. So that, again, they have that as a weapon, back pocket. But let's see the damage here. All right, Tesla went where is it? There it is. Tesla went down overall 0.25%. TSLY went up 0.44%. Okay, pretty good day. But let's take a look here. All right, we had 3 contracts. And they closed them, right? They closed them all. How did they do? Well, let's start at the top. They paid $450 to close the 195. That was a loss because you see our credit was 361. The 197.50 they actually made, because you see our break even on that was $200.10. So the Tesla price closed at 199.95. So that was actual profit. So we had to pay $250 to close that one. As you can see, we got $260. So we didn't make much, but at least we didn't lose money. We made money, 10 cents per share. The bottom one, again, this was just a stupid opening, in my opinion. They just, look at that. Just why? Why? For 84 cents, you just lost 732. Like that one, again. That was just a poor excuse of a contract opening. But the actual numbers, how much did we lose? Well, we lost 1.8 million on the 195, right? Yeah, and then we gained 208,000 on the 197.50. And then what was this strike? The 192.50, we lost 55,000. Again, to me, for no reason. So, pointless. Okay, now let's go to the new contracts that expire next week. We have 4 trading days, remember. They opened 3 separate times, although they chose the same strike price. So why? Again, I don't know. I don't know. Like, you had a chance to choose 3 different ones, or at least get rid of that stupid 85. Like, what is that doing? But anyway, what did they choose? They chose a $200 strike price. I mean, look at the price of Tesla, $199.95. Okay. The break even for next week is going to be $204. So we need Tesla to stay below 204 to not lose money. But we want to make money. So we want Tesla to be below 200. Percent out of the money. I mean, they seem to surprise me yet every week. So now they are only 0.03% out of the money, 0.03. And I can't say that it's because Tesla was priced so much higher early on. But no, I think the highest it reached was a little over 200. So, what's the best case? 1% out of the money? So to me, this was, on purpose. The plus, if we're gonna consider this a plus, this is a plus. Look how much they made. Over $4 per share. So they're going all in here. Look how much money they made. Oh my God. $19 million. You saw we were losing. We were in the red. See the running total? And now we're in the green. But in the profit that counts is, of course, L1, because again, the cutoff with declaration date, that does the proper formula. So they did that to put us in a credit position for the weekly calls. Although 9.4 million at this point is not a lot of money, because you see the distribution, only 11 cents. But what are they doing? why are they selling at the money calls? Is this a smart move or is this just bad? My opinion, you guys know my opinion. There's no room. There is absolutely no room for movement here. So we need Tesla to just either not move at all or go down. The plus, and I think this is the plus, 200, I believe, is the resistance. So I'm calling out all the chart guys, again, being, the tactical stock scalper, Claude, Kenny, these guys who like reading charts. I think they should make a video maybe this weekend if they can to tell us about this $200. Are we going to break out? Are we more likely to break out, or do we think this is a true resistance? Again, these fund managers, they have these tools. Here goes my beat up throat again. They have these tools available to them that tell them, okay, they're able. Because why would they do this unless they had a really good feeling? I mean, granted, 2 weekends in a row they lost, okay? And that's proven here, right? Profit loss, okay, they lost there, and then we go up above, they lost there, right? So not a great start. And then they're going for the gold here. So what are they seeing? Are they seeing a true resistance at 200? Or are they just morons? I mean, I don't know. So chart guys, if you have time, let us know what you think. And you could share, if you want to put the link on the comments. First one to do it, I could pin it and then people can watch it. But I don't know. 200, 199.95. We have 5 cents to grow. All right, man. Woo. Feeling great about that. It's, again, this is what it is. This is TSLY. So if this is not good, if this is not comforting, then it's not a great fund to be in, to be honest. If you trust the fund manager's judgment, then you're fine. But I don't know. To me, this is just nuts. This is nuts. All right. Cash and treasuries, it went up 2.2 million. And we talked about total income, 9.4 million. 11 cents total payout for the month so far. 1 cent a day or 0.13% daily yield. All right, let's go to the I have way too many tabs. This will be cleaned up soon. Active tab. Although it's one strike, I still just I put 3 out. But you see, 42,080 contracts for 200 strike. 0.03% out of the money. Unfortunately, I have to say that. But good Lord. God help us next week. 30-day IV, 42%. 916 is the current price of TSLY. I'm showing a total capital appreciation of 0. But again, this is what I'm running the numbers on. As you saw, CONY was going up. Even though they were capped, they were still moving up. And I have something at the end to look at this for next week. My reaction, I'm just saying, bad move, my opinion, bad move. But again, I'm nobody, so don't worry about me. I would not make that move. I mean, why? Why not just go 5% out of the money? I mean, they used to do 3 and we complained about that. Now they're going 0. But I don't like the move, me personally. It makes me want to sell more shares, to be honest. And I may do that. I don't even know. Because again, I'm still heavily allocated to TSLY, and to have most of my money in a fund that really can't recover week in and week out. But it's not a great feeling. But again, by the way, this is not financial advice, guys. Anything I say is just my opinion. I'm an expert in my own opinion, and it's worth what you're paying for it, obviously, like Dave Ramsey says. But yeah, please, these videos for fun and entertainment, so do not take this as financial advice. They still have the reverse split. So, I mean, at this point, Tesla's going to go hit $10. The reverse split's going to be like 20 at the end of the day. Not sure if that's what they wanted. Seems like they did rush the reverse split. I know I got a couple comments yelling at me. How do you not know how reverse splits work? It has to be this amount for a certain amount of days, blah, blah, blah. Okay, that's fine. I didn't really, dive into the trenches, down to the details of the whole reverse split, but companies going to do what they want to do. I guess they just didn't want to bother, or they didn't want it to be in single digits any longer. But I don't know. They did what they did anyway. Curve still sitting at 68 contracts. Their weekly call still sitting pretty, 215 strike, 7.53% out of the money, and that expires in less than a month. Again, their synthetic is at 265. It doesn't look like they're going to make money on that, but they still have time. But, we shall see. And by the way, that 2266 on the bottom, that is the price of TSLP, which is the Curve ETF. Okay? All right, let's go to the payment tab. So right now, synthetic income, they at a loss. They're at a loss 19,000, which is nothing. Short call income, as of right now, they're at a credit because, again, that brave move, brave or stupid, you guys decide. So total income for the month, 9.4 million. Outstanding shares, 89.7 million. That's 10 cents a share. Total income. Short call income alone, 11 cents a share. Which, that's nothing. Usually we have much more at this point. So, their synthetic is not bailing out their bad weekly calls. Reverse split, like I said, I'll leave that up until it actually happens. Outstanding holdings, again, they have one weekly call. Right now, it costs them $470 to close it. How much did they get for it overall? I know it was in the fours, right? There was several prices. Yeah, so they got, that makes sense. So they probably did it around the same price that it closed at. All right, so one thing I'm going to track, real quick, net asset value, looking pretty now, 822 million. NAV, 917, price, 916, close enough. So this is what I'm going to do for next week, because obviously my cap calculation is not making sense. If I'm assuming I think Tesla's going to go up, but again, I don't know crap. And if it does go up, I want to see how this plays out. See the buy call, the buy calls on the bottom. Those two, the 22 million. Let me scroll over so that's all you see. The 22 million, the 11 million, that will go up, right? As Tesla goes up, that will be more valuable. So I'm going to capture this on a daily basis to see how they perform. And then I'm going to check, okay, how does that compare to the weekly 200? Because that's going to go further in the negative, bringing us down. So I want to see how much that brings us down and how much the buy calls come up. And on top of that, the sell puts, they will also, move on top of it. So again, we're essentially at the money, right? We're at the money. So I'm going to track how much these are going up or down throughout the week, because I'm just very curious at this point. Again, these funds, they do interest me. I may not agree with, a lot of the decisions, but these funds are just very interesting, which is why I started covering them in the first place. So again, the sell puts, that's how much you have to pay to close it on the top. These are part of the synthetic. There's two synthetics. The buy call, this is how much we get to close it if we closed it. And then the weekly, that's how much we have to pay to close it. So if Tesla goes down next week, then guess what? That sell put is going to cost us more money. Okay? The buy call will be less valuable.